Next guest, that would be Ginny Horne, a markets correspondent here on the Schwab Network. All right, Ginny, we got the new jobs numbers in. Take us through some of the headlines and takeaways that you're seeing.
I will say the first number that stood out to me was 4.2%. That's the unemployment rate. I mean, a modest 0.1% uptick, but doesn't exactly signal what the Fed is aiming to do, and that's, of course, decrease the overall unemployment rate. So I think that's significant. You wouldn't tell by the initial move here by the overall markets, but I do think that, again, signals that right now there's still a lot of uncertainty when it comes to the Fed's next move, especially given their stance on really honing in on employment. You mentioned the 227,000 figure in November. Within this report, though, there's always some interesting data. Like, we did see the number of unemployed people did come in around 7.1 million. That was little unchanged in the month of November. Now, these measures are higher than they were a year ago when the jobless rate was at around 3.7%. The number of unemployed people a year ago was around 6.3 million. Now, among these various worker group, we have seen the number of long-term unemployed, which I think is becoming more and more important here as it continues to rise. That actually was a little unchanged at around 1.7 million in the month. This measure is up, though, from around 1.2 million just a year ago. In November, we saw that actually came in slightly higher, but the long-term unemployment accounted for 23% of all the unemployed people. So that is a trend I think has been more and more interesting to watch, because not only did we see a record number of people leave their jobs this fall, but we've also seen a record number of those that are unemployed for 6 months or longer, which I think is just kind of compelling, because I think it shows the jobs market right now. Well, sure, the headline number wouldn't tell you to be concerned. Those that are without work are finding it harder and harder to do so. Now, the labor force participation rate came in around 62.5%. That was also a little unchanged, and it's really narrowed to remain in this range between around 62.5 to 62.7% since December of last year. But the employment population ratio now stands at around 59.8%. Also little unchanged on month over month, but it's down by about 0.6 percentage points on the year. So I think this was going to be an interesting report, especially because there's several factors that were contributing. I mean, we saw major storms hit the southeast, and that's expected to have somewhat dissipated in terms of the economic read. Also, the fact that we saw 30,000 Boeing employees return to work. But I wouldn't exactly say that this number, well, it was stronger than expected, sure. I don't know if it necessarily changes the situation when you have unemployment at 4.2%, Diane.
Yeah, it's interesting to see, how the market is trying to dissect this report. Obviously, there's an initial knee-jerk reaction. It doesn't seem like there's a massive move in terms of market reaction. What I like looking at as well, great breakdown on some of the pockets that we see, like, for instance, longer-term unemployed or employed part-time for economic reasons. And, of course, the labor force participation rate is always important to look at. The sectors I do find interesting where you see growth. Healthcare, not surprised to see growth there. We've talked to economist after economist and heard from, expert after expert about how we will see growth in healthcare, and there's demand there. So you're continuing to see that growth of 54,000, which kind of lines up with what the patterns have been recently. What I did find interesting was it appeared to be some weakness in retail, which you would think at this time of year there would still be some strength there. You expect that to see that in the next payrolls report, or especially in the January payrolls report. What else stood out to you when you look at some of the sectors where there was growth and where we saw declines?
Yeah, and I'm glad you mentioned retail, because I was seeing lost 28,000 jobs in November, which, after showing little net employment change over the last 12 months, now continuing to see this declining trend is, I think, shocking, frankly. Like you said, the seasonality of that is really interesting. Also, you mentioned healthcare. I think no surprise to see government employment continue to uptrend around 33,000 jobs for the month, in line with its monthly 12-month average, which was around 41,000. Also, I do think that leisure and hospitality, given the fact that it's so huge, I mean, that also did continue to trend up in November. I also have to wonder if there's a seasonality component there, but following a little changed pace of growth over the last month. But we have also seen that now employment trended up in in food services and drinking places. Leisure, though, it specifically added around 21,000 jobs. And then you look at some of the areas that were a little unchanged, just to mention mining, quarrying, oil and gas extraction, construction, wholesale trade, transportation and warehousing, as well as financial activities and professional and business services basically showed no change. They're not usually the most interesting components of this report, but I do think average hourly earnings continue to actually, rise modestly around 0.4% over the past 12 months. We've seen that actually increase by about 4%. There's a lot of great data within this report. I think this is one of my favorites, other than maybe CPI, PPI, because now what we do next is speculate, of course, what it looks like for the Fed, a rate cut or not. I'm sure we'll be hearing about that all day long.
Yeah, it's true. This is one of my favorite reports to dive into as well when we go through, obviously both the headlines and then where you see the sector growth. Not surprised to see some of the growth beyond healthcare. When we look at leisure and hospitality, that makes sense this time of year, especially when we consider, how the consumer is holding up. In terms of the impact to expectations for the Fed's move, we've seen a slight uptick. It had declined a little bit. The expectations were ahead of this report. 68% in the odds of another decrease to rates. Now it's gone back up to a little more than 70% in terms of that expectation. So, we know there's a lot to chew on in this report. Great insight. Jenny Horne, a markets correspondent here on the Schwab Network.